Hi, Jonathan York, Bay Financial Partners, looking at investment markets. US interest rates continue to sort of nudge up, especially in the 10-year and the 30-year sector. The 30-year reaches a 12-year high at 4.47. While the all-important 10-year is at rates levels we haven't really seen since 2007 at 4.33. And the 2-year has just nudged above 5% now at 5.04. Now that's really all on the back of obviously the Fed still continues to talk tough about inflation, potentially further rate hikes, but also as well, the Fitch downgrading of some of the banks and then putting the banking sector on potential sort of negative watch. Meanwhile, on the flip side, inflation continues to fall in the US, and also as well, some of the data coming out now is showing some reasonably sort of resilient signs for the economy. Latest Philly Fed survey came out that was expected to be a negative number, came out at plus 12. So certainly the US economy is reasonably resilient, and it's just a question of how sort of long rates have to stay at these sort of elevated levels. Will the Fed increase rates further? Certainly on the data at present, it's going to be pretty tough for the Fed to sort of justify a further rate hike when you've got inflation falling. Certain areas of the US as well still experiencing sort of extreme weather conditions. We've just seen a sort of hurricane sort of rip through California. Haven't seen that for sort of 25 years. Also as well, the People's Bank of China has cut the 1-year interest rate there by 15 basis points. Now that's obviously trying to stimulate that Chinese economy, and again that could have major implications for the global economy. Oil has backed off and is just trading just above $80 a barrel now. Now that increase in US interest rates has really seen a global sort of sell-off in bonds. You've seen UK gilts reach levels you haven't seen since 2008. But certainly the UK economy is sort of managing to sort of plod along, still showing a little bit of growth out there, and really not falling into the mass recession that the Bank of England sort of predicted last October. Likewise in the EU as well, with that sort of sell-off and the increase in rates in the US, you've seen German bunds reach levels you haven't seen since 2011. But again, the European economy seems to be sort of pushing on at a sort of an okay rate. Certainly the summer months have been reasonably sort of kind so far. Plenty sort of tourists out there spending money. And that is despite the sort of extreme weather conditions we've seen in Europe. Now the Australian reporting season so far has sort of been okay, but again, even when the companies are reporting, some relatively sort of good news out there, there still seems sort of selling pressure. Because certainly the Australian economy looks in pretty reasonable shape. You've got a central bank that has been, relatively sort of cautious in terms of the rate hikes. you haven't got inflation that is sort of rampant like sort of other areas of the global economy. And as well, also the data isn't out yet, but you would expect a pretty major boost coming through in the Australian economy from the recent FIFA Women's World Cup out there. Certainly that was pretty well supported. There were lots of fans out there, and it looks like plenty of dollars were spent. Now here in New Zealand, less than 2 months now to the election, and the latest opinion poll is really pretty dire reading for the government. Labor slipped below 30%. It's worst reading for 6 years. Now again, with the Reserve Bank sort of acknowledging that rates are where they need to be, didn't anticipate to see any further rate hikes out there, and it's just going to be interesting now to see what comes out at the next meeting. Because as we're seeing elsewhere, inflation is falling here in New Zealand. But it's just a question of how quickly it can get back to that sort of 2%. There's also starting to be a discussion as well of whether 2% is actually a realistic target. Interestingly, well, the housing market's showing sort of signs of life as well and starting to see a little bit of recovery in certain areas. But that possibly could have more to do with the fact that it's costing you more to build a new house now than it is to buy an old house and renovate it. Also as well, reporting season in New Zealand, it's going okay, but again, even with good news coming out, we're still seeing seller pressure coming through on certain companies. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.